Hey guys, thanks for joining. This is Jeff Wright with Fish Creek Capital. We're going to go ahead and get started. Today is Monday, December 15th, and so let's just look and see what we've got going on today. We are live and unedited, so just yeah, we're gonna talk here in a minute about a bank stock and is it a good dividend portfolio company or not, and would it be a good company for retirement when it comes to cash flow. So we'll look at that in a second. Let's first just look at the market today. The market, I'm going to just I am going to share my screen. Let's just look at it together and talk about what happened today. It was kind of a quiet day. The market was really down, like it didn't really look good at all, frankly. So let's just see. Let me fix my screen here, and then we're going to look at this bank stock. So, okay, all right, got a little bit of a different look on the charts. This is still Thinkorswim. Again, I like Thinkorswim. They have a great charting platform if you're looking for a place to put an account, and you do your investments yourself. Thinkorswim, it's under Schwab now, so they have great charts. This let's just look at the futures. Really, these are the S&P 500 futures. This is a daily chart. It's kind of hard to see really, but what I would point out here is we've really been going sideways since November 28th. That date is behind my picture, I think, on the actual screen. But November 28th, we kind of went up on November 21st. And then, yeah, so for the last couple of weeks, we've really just been sideways, back and forth. And so that's one look. Let's look at the S&P 500. We'll look at the SPY. The SPY SPY is an ETF that is the S&P 500. So an interesting look here would be, again, this is not technical, or this is not investment advice. This is just technical analysis, my opinion only, educational purposes only. But you can see on this daily chart, maybe this is a little better. There's the down, or we were down on May, in May. This one, you don't see it as well as far as the dip down, but you definitely see this sideways action. Let's scroll this over. Yeah, there we go. Okay, we were on the wrong spot there. That was back in May. So here's November. This is back to like what we saw with the futures. So there's the down, and then we kind of went up, and then have been going sideways since that date, November 28th. But what's interesting on this daily chart is we've got 3 red arrows here. This typically is a sign that we're not necessarily going up. So we're here at the end of the year. We've got a couple of weeks left. Technically, I think the Christmas rally, Santa Claus rally, is after Christmas through the first 3 days at least of the new year is what people would call like the Christmas rally that you hear about. Now we're December 15th, where I think we're a week and a half away from Christmas. Christmas is on a Thursday. And so, yeah, this is not showing from a daily perspective that we're necessarily about to shoot up, especially with this sideways action. Here was a high 689.70 on the SPY, and then see how that line cuts across. Yeah, it's showing up there. You can see we just touched it, and now we've got these 3 red arrows. So I don't know, but I don't see the market going up necessarily a whole lot, maybe until we get to that Christmas rally time, after Christmas, and then the 1st of January. Again, educational purposes only. These are just my observations. We're focused here at Fish Creek Capital on long-term investing and investing in real companies as owners, and we're looking for dividends, and we're looking for the growth of the dividend. So that takes me into the bank stock. Let's talk about that. Regions Financial. Let's look at Regions Financial and see if it is potentially a company we would want to look at as an investment and as a cash flowing dividend company. They are a regional bank in the South. They have been heavy in the past on, they have a lot of retail branches that's kind of what they've been known for. And let's see what they look like. So we're going to go back to the same tools that I encourage you to kind of look at when we are just doing a high level look at businesses as owners, if we want to, be an owner of these businesses. And again, this is just high level. This is just quick for YouTube, just to kind of help you with some education on where to start. Once you kind of go through these high level tools, the next step would be able to go to in this case, Regions Financial website, go to the Investor Relations tab and start looking at some of their financial documents, some of their earnings calls. That's where you are going to dig deeper, look at their financials, balance sheet, cash flow statement, and you can really determine if this would be a good investment or not. But from a high level, for just a quick few minutes, I love fast graphs. I love Seeking Alpha. We're going to start out though with CNBC and just pull up Regions Financial just to kind of see what it's done for the year. So RF is the ticker for Regions Financial. And again, I kind of keep saying but this is how I start also looking for investments, just going through this same process before I kind of dig in deeper. This helps kind of cull down the list, if you will. So we're showing a dividend yield of 3.87. So that's pretty good definitely for a bank. We're looking for the year-to-date return, and we scroll down, we're 16% year-to-date. So that's pretty strong. And I think the reason I'm even considering looking at some of the banks, because from the regional bank perspective, as rates go down, which the Fed just lowered rates last week, remember, we don't expect the rates to go higher, especially with the new Fed chair, a pro-Trump Fed chair, especially. He's wanting to still cut rates further. That would do well for regional banks. So that's why I'm kind of looking at Regions in this case. So they've had a really good year. So let's jump over now to Seeking Alpha and just look at, so of course, again, you just put in the RF as the ticker up here and it'll pull up the company that you're looking at. The cover page on that summary is, it's going to have great analysis articles, news articles. These are really great to look at. They'll give you tons of commentary on the companies, people's opinion from an analysis perspective. You can see we've got a hold, a strong buy, hold, buy, and they'll have dates, September, October. That's in November 10th, November 18th. And yeah, so those are great ways to learn also more about the company and how to dig deeper. Over here on the ratings summary, we've got this is a Seeking Alpha thing, and that's actually can be helpful. And that looks good right there. The factor grades, the valuation, the profitability. You kind of want to look for, you don't want to see a D or F here, right? And so we're showing Bs. Growth makes sense because it is a bank and they're more of a retail bank. So I wouldn't expect that to be super high. Okay, so these are all observations from this summary page. We're specifically focused on the dividend, though, for this case. So let's go there. Their scorecard is really kind of mixed, honestly. So we got a safety of this with a C. Of the dividend growth is D+. So that's not good. Just looking at it again out loud and live here. Here they're showing 3.84 on a forward dividend, a 43% payout ratio. That's low. We want to be under 50%. So that's good. Here we've got a 5-year growth rate of 10%. That's pretty strong. Dividend growth of 13 years, that's real positive. So let's see if we can figure out why they got a D here on dividend growth. The 10-year growth rate is 16%. Like, that's super strong. I love that. Like, that's great. If you start getting a 3.8% yield with a 16% growth, that's really strong. Actually, let's just even, again, just want to give you cast the vision for why dividend growth is such a strong way to invest. So let's take that. Let's do our $100,000. Let's just put this in here, 3.8%, 16% growth. Let's say we still get that. We'll just take the price appreciation out. We'll leave it on 20 years. We're not going to add any money. We're just looking straight for the growth. So look at this. Okay, so that's $100,000, 3.8 yield. Look how it just ramps up on that with the growth, and then the return, the yield on the cost is incredible. Like, guys, this is how you get wealthy. I know it's not quick, and it's not Bitcoin, and it's not super fancy, but look at the difference. Okay, so let's take out that 16% growth rate. Let's do 10 years because that's actual data where that 10 years came from. Let's see how it changes it. So look at that. No growth, 3.8%, 100,000 to 145,000. So that's not really that great. This is, again, not accounting for any stock appreciation. We could maybe put a conservative 5% in there. We could probably, well, I know we could find out what the average return is for regions over the, we could actually get that on fast graphs. Believe it or not, we could do that. We're going long here already, but okay. So let's just do 5% appreciation, 10 years of time, because we had 10 years of history on that growth. So now let's add in the 16% growth and see how this number changes. Look at that. So even 10 years, 362,000 on, so that's a 3 times multiple, for the rule of 72, figuring out your return. That's a great return. So that is just with 5% appreciation and then 16% growth. If they were able to do what they did the last 10 years, the next 10 years. And then the reason that jumps up is when you add time to it. Time is just our compounder. Look at the difference that makes. Let's go 15 years. Look at that. Man. And then 20 years. Look at that. That's insane. So look, by the time you get to 15 years, the growth just really starts going crazy. And that is just the power of compounding dividends. That's why Warren Buffett does it, like, man, that's how you beat the market, guys. So let's come back. Okay, I'm getting stuck on that. That's why we like dividend growth. That's why we like compounding money. This is how you beat the market over time. You're not guessing. You're not hoping in the next AI stock, or in Bitcoin's movement. These are real companies as an owner and as a company that's deploying cash back, giving cash back to its shareholders. Okay, we are going really long here. So I think this is why we're getting the low grade on the dividend growth from Seeking Alpha. You can see their revenue growth is not that great, 1.3%. That would definitely slow down the grade anyways, because if their revenue is not necessarily growing, that could put a damper on the growth of the dividend. And so you would want to, I think if you were going to dig deeper into Regions Financial, you would want to go back and see what their revenue growth has looked like. And we can switch over to fast graphs now. I've already got Regions pulled up, and it will tell us more of the financials, kind of a look from a numbers perspective. So real quickly, so I got it on a 10-year. Again, we want to be, the normal ratio is 11%, 11.85 PE ratio for the last 10 years. We're right at that now. That's not counting today. This would be off of Friday's date. This orange line is the fair value. And then the yellow line down here is going to be, the dividends. So anytime you can get below fair value, banks are going to be a little different, because often when you look at a bank, you want to go off of the book value of the bank. And so the bank, and I've already looked at this. So the book value for Regions is around $20. Like if you can buy a bank under the book value, and you can back on Thinkorswim, I'll show you. If you go to analyze, let's go to Regions. Okay, book value per share, $20. So yeah, and you can see that under analyze. And again, this is looking at the fundamentals. That's what's chosen here. And that's what you want to do. You want to, when you're trying to dig a little deeper, again, we're just trying to decide if Regions is worth taking a closer look at. If you can buy a bank under book value per share, that's always really good. So it's $27 today. It was down 20 cents. So it's $27.39. So we're above that. So we're going to see that show up here on fast graphs. Like, so where fair value is 15, it's got a blended PE of 11, normal ratio. That's actually, I take that back. Regions does not look that bad from a 15-year perspective. They've got a growth rate here of 12%. That would be off of earnings per share, which would also be good for dividends. Let's scroll down on the forecasting. Normal ratio 10. Again, fair value at 15. So if you take the adjusted earnings growth, you can see here 11%, 10%, 8%. Growth rate 9.35. So they're fast graphs, again, educational purposes only. They're projecting a pretty good return. Fair value price of 35. Future stock price at 42. I think the banks could be a place to look, for next year going forward, where, again, thinking about the lower rates. If the economy is hanging in there and no recession is on the horizon, then regional banks would do well, because they're going to support the small business, environment. They're going to support mortgages. Regions has a Regions mortgage company. So lower rates are going to be good for regional banks. So maybe what we could do tomorrow, we need to pick another bank and look at it. Maybe we could look at Synovus Bank. That's another bank that's a regional bank that's out of the South, and we'll compare it to Regions and see what it looks like. But Regions Financial does not look so bad right here. Again, educational purposes only. But I think the regional banks would be a place to maybe dig a little deeper. So let's look at another one tomorrow. Join me tomorrow, and we'll check out Synovus Bank and see what it looks like. Thanks for watching. We'll catch you tomorrow.